I was quite surprised on Thursday and into Friday that markets didn't react more radically on the news that Soleimani had been assassinated or put away. Is the market just smarter than we think it is?
I think it certainly is.
Better at discounting?
I think it's better at discounting dramatic information than it has been ever, as I can recall. And I think that it's behind the resiliency that we see in the market. I think initially you'll see, for instance, in the oil market, will react fairly violently to something like this overnight. But when it's actually considered, and it's considered very quickly, the market is quick to discount what has occurred and shows a resiliency that really is uncanny, but is also marked to this recovery that we have seen since March 9th of 2009.
So as you look at the investing landscape right now and saying what you just said, in other words, that the market is better at discounting risk, does that mean that I need to be less worried about, quote, getting defensive in my portfolio at times where I perceive there to be greater risk?
We certainly think so. We think it's important to know what you own and why you own it. We think it's important to separate the difference between savings and investing. Investing be a longer-term objective, have an idea what your goals and objectives are, your risk tolerances. For instance, during this period from Friday through Monday, when we published on Sunday night our weekly piece, we said we're sticking with the cyclicals here and that we expected that this would be discounted by the market within a few days. A little bit early, we thought it might be Wednesday or rather Thursday or Friday by the time we got discounted. But it looks like this has been discounted. Some of it is the digitalization process of news. Everything is very
so
quickly
fast.
reported. The analysis is very quick, and communications between governments, even in situations where there's not great relationships, through intermediaries is remarkably sound if you consider
Twitter.
just the last 24 hours.
You've seen oil go up and then moderate somewhat. You've seen gold go up. And Steve, I know you, like John, also like cyclicals. You're getting even more specific about chemicals and paper.
Yeah, and to John's point, these are trading at trough valuations. Anyone who wanted to sell these cyclical names has been given the chance to sell them. The problem is that everyone still rushes into tech. So I like a name like WestRock, WRK, a name like OLN, a name like TSE. But they're all just getting hit and hammered. And to John's point, when does the market say, okay, let's bet on cyclicals that the global recession is not coming? So they keep ushering into these tech names, and a relief rally like this doesn't help our case with the cyclical names, but I believe the time is in short order for that to happen.
You know, we were seeing a lot of experts coming on and talking about energy being an opportunity going into 2020, and then the crisis with Iran hit. How does that play into how you see this playing out over 3 months, 6 months, the full year?
Even funds that are always long energy, that are always bullish energy, said to me yesterday that it was overdone. So we're still in an oversupplied world right now when it comes to energy. We outproduce Saudi Arabia. And who else? Russia. And who else? Go down the list. So we are the top producer. We haven't seen that since basically the 80s. So for me, this is not the time to be long energy. I would, other than a trade, I would exit those energy bets, but I would be long gold. I think the time to be long gold is now.